Pendle Finance is about to do very great this cycle. I'm going to tell you guys why. I'm going to show you guys how I levered up on my Pendle, using my Pendle as collateral, and all the details around it. Before I get started, I do have to say none of this is financial advice. Consult with your financial advisor before making any investment decisions. Let's jump right into the content. So first off, what is Pendle Finance? So one, Pendle Finance is my largest holding other than Ethereum. They are a bond stripping protocol. And the reason why I like Pendle Finance, they're RWA protocol as well. And we haven't really seen RWAs have their time in the sun this cycle just yet. So essentially what Pendle Finance does, I'll give you the high level. We made an in-depth video on it. The link is in the description. Feel free to give that a watch. I also made a take profit video showing you guys how I plan on turning 50K into, I think, 2.1 million. So basically what they do is bond stripping. So in TradFi, there's an area called bond stripping. It's a $22 trillion a year industry. And essentially what you can do is, and institutions love this, you can separate the actual principal of the bond from the coupon, which is the yield that it pays. In TradFi, the only thing is you can only speculate on the current principal and the current coupon rate. Pendle Finance allows you to speculate on the future principal and the future yield. So if you think the interest rate of something is going to rise, you can long or short the yield and vice versa with the actual principal. So let's look at the Pendle price. I'm going to tell you guys where I'm expecting it to go. And then we're also going to look at some Pendle fundamentals. And I'm going to let you guys know why I think it's so undervalued. And then I'm going to show you how I use leverage on Silo Finance. So first, if we come to CoinGecko, you can see right now Pendle is $3.95. The fully diluted valuation is just over $1 billion and the market cap is 647 million. Okay, so tokenomics are really good. You don't have that much of a discrepancy between these, and we broke down the tokenomics in the video. And if we go to DeFi Llama, we can see it's $123 billion locked in DeFi right now. And if we scroll down, you can see that Pendle is number 11 in terms of total value locked in between all protocols in DeFi. Number 11. And you can see in the last day, there's been an increase. In the last 7 days, there's been an increase. And in the last month, there's been an increase. But if we go over to the price, you can see it's just been dropping down and down. One of my favorite quotes by Warren Buffett is, in the short term, the market's a voting machine. In the long term, the market's a weighing machine. So while the fundamentals of Pendle are getting stronger, you can see that the price has still been dipping, right? And we're on the daily chart here. It was going up and up and up. We fell below our 62 EMA. So as we're going, I'm expecting Pendle to rise. We started buying Pendle way down here. This is my first take profit level. And if I scroll down on my chart, link in the description for the take profit video is there as well. My next level to take profit is at 25 bucks, which is a 5x from the first take profit. And then I have all the other ones up here. The app I use to lever up on Pendle is Silo Finance. And I didn't use Aave or nothing like that because I was able to use my Pendle as collateral. I'm going to show you guys that here. You can see they have 76.8 million in total value locked. At their peak, they had 293 million. They've never been hacked. And I'll show you guys that they have plenty of audits here. So if you come here, I'm actually going to play this YouTube video because it's a pretty good explainer. And I'm going to translate the details.
First-generation lending markets like Aave and Compound expose users to unwanted risk. All tokens are deposited into one big pool. An attacker can manipulate the price of any token in that pool, inflate the value of his collateral, and steal all other tokens in the shared pool. Because one bad token can ruin a shared pool, Aave and Compound restrict what assets can be used as collateral, leaving most tokens without borrow-lend markets. Silo is different. Instead of one pool for all tokens, we created one pool for every token. Each pool is limited to one unique token and ETH, the bridge asset. How does the bridge asset work? If you want to use token A as collateral to borrow token B, you move the bridge asset between silo pools, similar to Uniswap's trading pools. Therefore, the only risk in pool B is ETH, not token A. The bridge asset allows for liquidity to flow between pools efficiently and securely. By isolating the risk of all tokens to one pool and connecting pools together with ETH, Silo creates risk-isolating lending markets for all tokens so that any token can be collateral. Silo is the first second-generation DeFi lending protocol that provides secure money markets for all crypto assets.
All right, so basically what Silo does is they allow you to borrow against things in Silo, and they also silo off the risk as well. Okay, so you see here, 2021 ETH Global Hackathon winner. ETH Global is the ethetf hackathon, which is like a pretty big hackathon. So you can deposit an asset and borrow against that asset directly versus having everything in one pool It spreads out the risk. And here are their audits here. I'll leave you guys to go through them. 4 audits is, I like that. At the same time, still invest what you're willing to lose. Radiant had more audits than this and they still got hacked. So I don't have all of my Pendle on here. They have their roadmap here. They also have their team. I always like when people are docs. It shows that they believe in the project. So now we're going to go ahead and launch the app. So they have this thing on a couple different markets. As you can see here, I'm on the arbitrum market because that's where they have the Pendle. So you go here, it shows how much is available to borrow. I borrow USDC because I want to pay back USDC. I don't want to pay back ETH because I think ETH is going to rise, right? I don't want what I borrowed to go up in value. I want my collateral to go up in value, which is Pendle. The ETH APR, USDC APR, which is 9.3 or 10.9, okay? It's a lot, but I don't plan on being in this position too long because, like I said, I am expecting Pendle to rise. So if I go here, you can see that I deposited $21,318 and then $5,399 to borrow $8,385, okay? It gives me my liquidation price for Pendle and USDC. Now it says if you borrow 2 assets, the liquidation price for each asset is weighted to reflect its impact on the position. I only borrow USDC, and it shows here my liquidation price. I don't have to do the math, which is pretty dope. So my liquidation price is $1.99. We go back to our chart here. Right now, Pendle's at $3.94. So in order for me to get liquidated, it would literally have to go down pretty much 50%. I had it that way purposely. I don't think Pendle's gonna go down 50%. At least right now. So I borrowed USDC, and like I said, I used my Pendle as collateral, and then I took the USDC and I used it to buy more Pendle. So when Pendle goes up, I'll be able to take profits on my Pendle, sell it to USDC, pay off my loan, and now I get to keep the difference. And if we the RWA category on here, you can see that Pendle is number 9. They have more TVL than pretty much all of these. I can't really say Chainlink. Like Chainlink, they're different. They're an Oracle protocol, but they have a higher TVL than Ondo, Mantra, XDC, Quant. Maker has a higher TVL, but Maker's market cap is also 1.1 billion. Pendle's is 648 million. So very, very undervalued. Short-term voting machine, long-term weighing machine. Eventually, the weight of the TVL, the market cap to TVL ratio is going to balance out, and it eventually is going to sway to the other side to where Pendle's going to be overvalued. And that's when we're gonna make our money. So guys, with that, I'd like to conclude this video. If you like this kind of content and you wanna learn how to execute on strategies more like these, learn how to yield farm, accumulate Pendle passively, go ahead and click the link in the description, book a free strategy session. You'll talk to me, see if our program is a good fit for you. If not, we're happy to point you in the right direction. But with that, thank you guys so much. I love everyone who's watching. Like, comment, subscribe, share with a friend, and I'll see you guys in the next video. Take care and trade safe.